Have you ever wondered about the current state of the housing market in the United States? In recent times, the real estate landscape has been a complex and intriguing one. The first half of this year has seen a significant rise in home prices and mortgage rates, a shift that has led to a slowdown in both sales and construction. Drawing from a CNN article, we unpack this phenomenon. The increase in prices and rates has inevitably brought about affordability issues for buyers. The mortgage rates reached a peak of 5.81% in June, creating a formidable barrier for potential homeowners. This has resulted in a dip in sales volumes, consequently leading to an increase in inventory and a moderation in the growth of prices. Interestingly, while prices for new construction homes have seen a decline, the prices of existing homes continue to rise. This dichotomy paints a vivid picture of the market's current state. In the face of these challenges, economists forecast a continued increase in home prices throughout the year. This increase, however, is expected to occur at a more languid pace due to the cooling demand and the burgeoning inventory. These affordability issues are not new. They have been persistent in the housing market. In fact, home affordability is currently at its lowest since 1989. This housing market is proving to be a tough nut to crack for buyers, with the volatility in mortgage rates further impacting the market's dynamics. The housing market is shifting, and the effects will be felt by homeowners and potential buyers alike. As we delve deeper into the implications of these changes in the coming scenes, bear in mind that this is more than a story of numbers and rates. It's a narrative of dreams, aspirations, and the great American pursuit of home ownership. So what do these changes mean for sales and construction in the housing market? Well, let's delve into this. As we've seen, home prices and mortgage rates have been on a significant upward trend. This has had a marked effect on the volume of sales and the pace of construction. It's a simple equation, really. As prices go up, affordability goes down, and fewer people are able to enter the housing market. This, in turn, leads to a decrease in sales volumes. But what about construction? The story is somewhat similar. With less demand for homes due to high prices and increasing mortgage rates, the incentive for home builders to construct new houses decreases. After all, why build something if there's a chance it won't sell? This sentiment is echoed in a recent Business Insider article, which noted a decline in home builder sentiment and existing home sales. Now you might be thinking, but surely this is just a temporary blip. Unfortunately, the current state of affairs suggests otherwise. With the ongoing rise in home prices and mortgage rates, it's unlikely we'll see a sudden surge in sales or construction anytime soon. This situation doesn't just affect potential homeowners, mind you, it's a ripple effect that impacts a whole host of industries. Think about it, fewer houses being built means less work for construction companies, less demand for building materials, and even a potential decline in jobs in these sectors. It's important to remember that the housing market is a complex ecosystem. It's not just about buyers and sellers. It involves builders, real estate agents, lenders, and a myriad of other players. As we can see, the housing market is not just about buyers and sellers, it impacts a whole ecosystem of industries. But what does all this mean for the average American looking to buy a home? Let's delve into the crux of the matter. You see, the housing market is currently experiencing a significant affordability challenge, the likes of which we haven't seen since 1989. Yes, you heard that right. The last time home affordability was this low, George H.W. Bush was just settling into the Oval Office. Drawing from a recent CNN article, we find that mortgage rates hit a high of 5.81% in June. This surge in rates is a major factor contributing to the affordability crisis. As mortgage rates rise, so does the cost of borrowing, making it harder for prospective homeowners to secure a mortgage that won't break the bank. But it's not just about the mortgage rates. The housing market itself is witnessing a peculiar dynamic. As sales volumes fall, we're seeing an increase in inventory. Now, typically, a rise in inventory would suggest a buyer's market, with more choices and potentially lower prices. However, the demand is cooling off, creating a stalemate situation. Buyers are facing a conundrum. A plethora of choices, but at prices that are out of reach for many. Existing home prices continue to rise, even as the prices for new construction homes show signs of dropping. This essentially means that despite the growing supply of homes, the cost of owning a home is not coming down. It's a classic case of supply and demand, but with a twist. The supply is there, but the demand is tempered by the high costs, leading to a market that is challenging for buyers. In this challenging market, the dream of owning a home is becoming increasingly difficult for many Americans. This affordability issue is not just a statistic on a page, it's a reality that is impacting the lives of people across the country. It's a reality that is reshaping the American dream. So, where is the housing market headed next? That's the question on everyone's mind, isn't it? Well, if we take a look at the predictions made by economists and industry experts, it appears we're heading for a decline in home prices. Yes, you heard it right, a decline. Business Insider recently published an article where experts forecasted drops of 15 to 20%. This isn't a small number by any means. It's a significant shift that could reshape the housing landscape as we know it. But what's driving this predicted decline? Three key factors are at play here. First, there's the high level of construction. With so many new homes being built, supply could outstrip demand, pushing prices down. We've seen this happen before in the market, and it seems we're headed that way again. The second factor is falling demand. This ties in with the affordability issues we discussed earlier. As prices have soared, fewer people are able to afford homes. This reduced demand, coupled with increased supply from high construction levels, could pave the way for a price drop. Finally, there's the tightening of monetary policy. As the government takes steps to control inflation and stabilize the economy, we're likely to see an impact on the housing market. Higher interest rates could discourage potential buyers, leading to decreased demand and in turn lower prices. So while it might seem like doom and gloom, it's important to remember that markets are cyclical. They go up and they come down. It's the nature of the beast. And while a decline in prices might not be great news for sellers, it could present an opportunity for buyers who've been priced out of the market in recent years. The housing market is on the brink of a significant reset with potentially far-reaching implications. So whether you're a homeowner, a potential buyer, or just an interested observer, keep your eyes peeled. The landscape is shifting, and it's going to be interesting to see where we end up. But the impact of these changes is not confined to the United States alone. You see, when a country as influential as the United States experiences a seismic shift in its housing market, the reverberations can be felt around the world. The United States, after all, doesn't exist in a vacuum. It's an integral part of a global network of economies, each interconnected and intertwined in myriad ways. Consider this. The United States is not only one of the largest economies on the planet, but it's also a hub for global finance. Changes in its housing market can influence investor sentiment worldwide, affecting how and where money flows on a global scale. A downturn in the US housing market can create a ripple effect, causing investors to pull back from real estate markets worldwide. Moreover, these changes can have profound implications for international trade and economic development. The construction industry, for example, relies heavily on imports of materials like steel, wood, and concrete. A slowdown in American home building could lead to decreased demand for these materials, affecting industries and economies around the globe. And let's not forget about the human impact. The United States is a destination for people from all corners of the world, drawn by the promise of the American dream. A more challenging housing market could alter the dynamics of immigration as the dream of owning a home in America becomes more elusive. Finally, as the United States grapples with its housing market reset, other countries may take note and reassess their own housing policies. It could inspire a global conversation about affordability and sustainability in housing markets worldwide. So, you see, the changes in the US housing market are not just a domestic issue. They're a global concern, one that could shape the future of housing markets around the world. As the housing market in the United States resets, the ripple effects will be felt across the globe.